Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This is a quote by an unknown author. Dare to believe. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 40, NASDAQ off 13, S&P's off 7.5, gold contract up $6.10, traded $1,203 an ounce. Silver up 6 cents at $17.06. Platinum up $8 at $1,153 an ounce. Copper up a penny and a half at $2.82 a pound. Light sweet crude up $2.15, trading at $51.31 a barrel. Bonds, we had the 10-year down 17 ticks, 128.06. 30-year off 2 full points at 162.20. And King Dollar up 393 ticks, trading out at 97.53. The euro was off, where is she? She's off 88 at 108. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so S&Ps, folks, coming into the lowest swing point with volume. Market tried to hold as well as it could hold out here today. Futures were down heavy this morning, about 14 points. They came back quite a bit, but bottom line, they actually didn't. It was a sideways move to down, but what we had is this. The swing low of March 11th is 204.40. We hit 204.12. We did that with 145 million shares versus 110 million. So what does that mean? That means that, guess what? You're not done on the way down. It means that this market wants to go after the bottom of the consolidation that had been in, that it actually had broken out of. That bottom of the consolidation now is 197.86. And what it also means is this, is that when you actually look at this market, the market hasn't gone anywhere since November 6th, which is pretty wild because we're dealing with the end of March right now. But we've been up at these highs. Each and every time that you do go down, you're building cause to go to lower price. You go down with volume, you go back up with lighter volume. It cracks again, you go back down with volume. Bottom line, if you take a trend line on the S&Ps, and I'll do that in the program. If you take a trend line with the S&Ps, bottom line, when we broke down in October of 2014, that was the initial break. All these test higher highs have been just that. They've been tested and they've failed. The NDX 100, the 3 Qs. What do you have with the 3 Qs? 3 Qs today got into and under its swing point, and you had juice behind the move. We did 46 million shares. We closed at 105.12. That swing point is 104.96. The last swing out there, we did 21 million shares. Well, we did double that. We did 46 million. What does that set up? It sets up the same type of situation, meaning that you're going to run down into the lower part of this consolidation. The lower part of this consolidation is down at the December price points of 99 bucks, and you're at 105 right now. The larger issue is October 15th. You know, when you're dealing with October 15th, and many of these equities are already blown by those, the October 15th swing low is 90, and we're still at 105, which is a big number, by the way, from where we are versus where I suspect we're going to get to. Gold contract. What do we have with gold out here? We had juice in gold. It didn't hold price. We stayed up. Okay, we were up at 620. Didn't hold price though. And what I mean specifically is this. The gold contract got into a price point up here today of 1219.50. Closed out at 1203. But you know what we have? We have monster volume, folks. And when you get monster volume, pushing into swing points, you're going to be right back into that higher swing point, and you'll blow it away. We did 227,000 contracts today as it moves up to the 1219. Now, what that did also is this. We were talking about how we came off the bottom with conviction. What has happened in the gold market is this. We tested the lows as we should have. We were doing the larger test from 2011 all the way down to where we were a couple weeks ago, and we had done that whole area with dramatically lighter volume. That was going into the 2011 break topside. So on the way down, we did everything we should have done. What we hadn't had is any buyers. Well, the buyers came in fast and furious on March 18th when the Fed announced that they're going to take out the patients. Bottom line, market could care less. They didn't believe them. They're saying, hey, guess what? You can take out the patients, but the rates aren't going up. So we got the expansion of volume, wide price spread on the 18th. You got the follow through today. That's what's happening. That's gold, because gold hadn't, it wanted to go test the 1223, but it hadn't broke the whole downtrend from the 1308. So you're at 1203, gold wants to go to the 1308. Silver, we take a look at the silver market, and silver has been ahead of gold off this bottom, folks. So we take a look at silver. What we have with silver is this. Silver market today, this is, okay, silver. What silver is done out here today, silver is closed out at 1705. What we did out here is that we did 41,000 contracts, and silver had already got into and over the 1690 area. It was testing out the 1743 today. You got the 1740. I expect what you're going to see here, and you had some volume in it. It would have been nice to have higher volume. We had 41,000 contracts. That's not bad, but when we did on the 20th, we had 60,000. So it would have been nice to have more. I expect what you're going to see, silver's going to build some cause here. Silver is on its way up to that 1850 area. So you're talking about a nice move on that contract. Now, let's go to the XAU and the HUI, because what we had out here is that they sold off the XAU, they sold off the HUI, they sold off the gold stocks, they sold off the silver stocks, and they had a little volume on them. So it's like, okay, what's that all about? Well, the XAU right now is at 68.39. I expect what you're going to see, the 67, 66 is going to get tested, and what is always dangerous, no doubt, is coming into a Friday with the aspect of the gold market pulling back slightly. Now, I don't think that's going to happen tomorrow, specifically because politically over in the Middle East, there's huge problems. So I expect just the opposite will happen inside the contract. Why? Because traders, investors, hedgers, all of the above are going to be really paranoid to go home short gold. Okay? Bottom line, you get more disturbances over there, which I expect you're going to get. You're going to see gold. You know, we gapped up 20 bucks last night when this thing happened. Gold can gap $50, $60, $70 in a heartbeat. And once those gaps start taking place, let me tell you something, you can get some really fast gaps inside the gold market. Bonds. Let's go to the bond market, because bonds got hit out here today. Now, they got hit, but the way they got hit, folks, is still saying that the 32-year bull market in bonds is not over. 32 years. That's how long it's been going on. Pretty amazing. Bonds right now, we're down 16 ticks. We did 1.2 million contracts. That 1.2 million contracts was going against 1.4. So that setup there is that bonds are still building cause for a higher price. King Dollar, we can put it together with King Dollar. What we have with King Dollar is this. What King Dollar did do out here today is that it rejected lower price and had lighter volume. I don't expect you're going to see a lot of movement, however, tomorrow morning on King Dollar. I expect that it's going to go up maybe, we're up to 400. It can go up a couple hundred ticks. Give it up. It wants to go into the March 19th area. And the top of that area is not too much further from where we are. It's about 200 ticks. I expect it's going to get a little sell-off coming into that area. And why? Because that absolutely has to do with the aspect of how the metals market is trading, wants to trade versus the dollar. I think what you had out there is more than likely the Fed, someone was stepping on gold. They don't want folks to get really paranoid about what's going on, particularly in the Middle East. And the quickest way that folks pay attention is that when gold gaps up $50, $60. You know, you haven't seen it in a while. Gold gaps up those kind of numbers, people start paying attention that what is happening. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials down 40, closed down 40. Nasdaq off 13. S&P's off 5.5. We're going to be right back.